stock option expiration cycles. So in this topic, you will learn what is option expiration, what is option expiration cycle. So if we are trading options, we need to know the option expiration cycle is important. There are three types of options, three types of option cycle. There is a modified option expiry cycle. I will give you the examples of option expiration cycle and what happens after expiration date. And if you trade leaves, then you need to understand the option cycle for leaves. And lastly, how can you tell what cycle a stock is on? So these are the topics of this presentation, and it will go on for like about 35 minutes. So what is option expiration? So we know that each options have an expiry date, and they usually expire on third Friday of you know, of the month or quarter, etc. And they are fixed. So expiration date is fixed. So what is option cycle? The option cycle is a pattern of months in which options contracts expire. So when you see the example, you will see that there are certain patterns where some stocks options are expiring. Some are expiring in January cycle, some in February cycle, some in March cycle. So there are three cycles. So why we need to know option expiration cycles? The reason is the trading options require strategies. So when we are trading options, we need to adopt strategies. So if we know which months the options are expiring or it will expire, or which month will be added in future in the option chain, we can adopt the strategies accordingly. We can make adjustments in the trade, and in this way the success rate will go up and we will not be trading in dark. So if we know in advance which options will be, which month will be added, where the options are expiring, we have a better chance of success. So knowing option expiry cycle is important. So there are three types of options. There are weekly options, monthly options, and quarterly options. I trade monthly options, and they expire on third Friday of the month. So I don't trade weekly options, they are dangerous. And quarterly options I also don't trade. So monthly options is the one I trade. Weekly options, monthly options, quarterly options. Weekly option expiry. So weekly options are listed for selected stocks, and they are listed on Thursday. So each Thursday the weekly options get listed, and then they expire next Friday. So if today is Thursday, they expire next Friday, not tomorrow, next Friday. So there is a very limited time period. So if you're trading weekly option, you have to be right fast, otherwise you're losing premium every day. So it's better to sell than to buy the weekly option. So if you have a long long options 4 or 5 months out, you can sell the weekly options to collect the premium instead of buying. Buying is dangerous. Monthly option. The monthly options, the last trading day is the third week of the month, and technically they expire on Saturday, but since there's no trading, so it expires on third week, last trading day of third week, which is Friday. So quarterly option expiry, last trading day of every quarter. So quarterly option expire on the last trading day of every quarter, such as March, June, September, and December. So there are three: weekly, monthly, and quarterly. When you look at the option chain, you will see that each option has 4 expiration months. What you will notice is the current month is listed, the subsequent month is listed, and then there are 2 extra months listed. So current month is September. So if you look at the option change of any stock, you will see that September will be listed, October will be listed, and then 2 extra months will be listed. So which 2 extra months? That's the question. These 2 extra months depend on the cycle. So which 2 extra months? There are 12 months in a year. So if we are in the month of September, then September and October is listed, then the 2 extra months listed, are they listed November and December, or December, January, January, February? Which 2 months? So you would notice sometimes the next month is, you will see September, October, November, and then maybe January, but then you will see September, October, and then November is not listed, December is listed. So what is going on? So there are 12 months in a year, right? So which 2 months? So understanding option expiration cycle answers the question, which extra 2 months? So there are 3 option expiration cycles: January cycle, February cycle, and the March cycle. So option cycle is assigned randomly. So when a stock is listed for option, they can be randomly assigned for any cycle: January cycle, February cycle, or March cycle. So let's say a stock is A, B, and there are 3 different stocks: stock A, B, and C. A can be assigned to January cycle, B can be assigned to February cycle, and C can be assigned to March cycle. So there are 3 cycles: January cycle, February cycle, March cycle. So if the option cycle is January, then this is what happens. January is the first month of the year. Then the other 3 months which will be assigned, which can be assigned, are the April, July, and October. Because April is the first month of second quarter, and July is the first month of third quarter, and October is the first month of fourth quarter. So if you know this stock is assigned to a January cycle, then you should know that January, April, July, and October months will be assigned to this stock. If it's a February cycle, if the stock is assigned to a February cycle, then because February is the second month of the year, then the second month of the quarter will be assigned to this stock. So May is the second month of second quarter, August is the second month of third quarter, and November is the second month of fourth quarter. So February, May, August, and November, these are the 4 months which will be assigned to this stock. If the stock is assigned to March cycle, then because March is the third month of the year, so the third month of the second quarter is June. June will be assigned. Then the September is the third month of the third quarter, that will be assigned, and December is the third month of the fourth quarter, that will be assigned. So these 4 months will be assigned to the March cycle stock. So far clear? January, February, March cycle. Now there is something called modified option expiry cycle. what happened is they, because of the hedging purposes, besides assigning these months based on the cycle, the stock also have the option for current month and subsequent month because of the hedging and speculation purposes. So when traders started hedging and speculating, then they said, okay, we need a current month and subsequent month added to the option cycle. So 2 more months. So there are 4 months. So out of 4 months, 2 months are current month and subsequent month. So September and October. And then 2 months are added from the cycle, which is assigned. So if it's a January cycle, then the stock will be added from the January cycle month. If it's assigned to a February cycle, then they will pick up 2 months from February cycle. And if it's March, then they will pick up 2 months from March cycle, and they will assign two of these months, current month and subsequent month. So current month, subsequent month, and 2 months from the cycle. So 4 months all the time. So this is the reason for modified option expiry cycle, speculation and hedging. So yeah, it will be clear when I give you the examples. I have a lot of examples, so don't worry, things will be clear. So option expiration cycles, example 1. So let me give you the example. So let's say today's date is January 1st. And the stock is assigned to January cycle. If today is January, then, and we know that each option has 4 months, and we know that there are 2 modified months, then these are the 4 months which will be assigned. So let me explain. Because it's January, so we will see January as a current month, right? We know subsequent month because of the modified cycle. February will be assigned also. So anytime if you are trading in January, we should see January option and we should see subsequent month. So these 2 months are given anytime, the current month and the next month, all the time. As soon as the current month expires, then another month is added. I will show you the example. So January and February, you will see in the month of January. So this is clear. Then the month of April is assigned because the stock is assigned to January cycle. So April is the first month of the second quarter. And July is the first month of the third quarter. So July will be assigned also. So for this stock having January cycle, we will see January, February, April, and July listed. So it's clear? January, February, April, and July. January is listed because we are in the January month of January, and we know it's because of modified cycle. February should be listed too. April, because the stock is assigned to January cycle, so April is assigned because April is the first month of the second quarter, and July is assigned because July is the first month of the third quarter. 4 months, January, February, April, and July. Now, give you another example. So what happens when January expires? So when January expires, and we know there are always 4 months, the February, which was the subsequent month, second month, it will become the current month. So now the January has expired. Suppose Friday, last Friday was the third Friday, and tomorrow Monday is the there's no more January option. So February will be the current month, and then you will see March will be added as a subsequent month because we need to have a subsequent month. So March will be added as a new month, and April and July will still be there because the stock belongs to January cycle, first month of the second quarter, July, first month of the third quarter. So we will have February, March, April, and July. I will answer the questions later. So option expiration cycle, January, because this stock belongs to January cycle. So available months always 4. January has expired. So now we have February. And subsequent month will be March. So this will be added. As soon as January expires, you will see March added. And April and July will be there. There is no change because of the cycle. Now what happens when February expires? So let's say February also expires and the stock belongs to January cycle, and we know there is always 4 months. So then March will become the current month, right? And April will become the subsequent month. Before, April was the part of the cycle, but because we need a subsequent month, so April will become a subsequent month. And July was there before, first month of the third quarter. But what happened now, we need 2 months from the cycle. So October will be added. So when February expires, you will see October as newly month added if the stock is in January cycle. So in other words, when February expires, we know available month should be 4. Then the March will become the current month, and March was there. When January expires, the March was there, February was there, but now the February expires, so March is there, March is the current month. April was there because of the option cycle, so April became the subsequent month. July was there before because of the option cycle, but now we have only 1 month from option cycle, so they will add October as another month because October is the first month of the fourth quarter, so newly added. So when February expires, you will see March, April, July, and October, these 4 months listed. Now, option cycle leap examples. So I give you some examples of leap. Okay, so I have swing option service. The published price is $337. For you is $267. If you're interested, please send email to me at noshi@financialmarketwizard.com, and I will send you a special link. You can join via that link, PayPal link, for $267. And offer is valid till tomorrow, 11 a.m. Okay, so understanding option cycle for leaps. So what is leap? Leap is a short for long-term equity anticipation participation security. It's a long-term, in other words, it's a long-term option. And it's available only for the popular stocks. And they have more than 4 expiration months. They have expiration like a year out, 2 years out, no more than 3 years out. Usually they have January month options like January 2019, January 2020. The point is the leap months are added in month of May, June, or July. So I will explain why they are added in the month of May, June, or July. So give you the examples, then you will understand. So if you trade leaps, then you know when the leap month will be added. So you have to remember in the month of May, June, or July. So if the year is in these 3 months, then you know that another year will be added. So this is the example. Let's say the option expiration cycle is January, and we are in the month of May 2017. So now again, we know that they're modified cycle. Because of modified cycle, we have current month and subsequent month. So we will have May and June, right? And because of the option expiration cycle, we will have July and October, because July and October are the first month of third quarter and the first month of fourth quarter. But because this stock has leap, so it will also have January 2018 as the option listed and January 2019 listed. So these 2 months will be there too. So there will be total of 6 months for this stock. So current month, subsequent month, option cycle first month, option cycle second month, leap option 1 month, leap option 2 months. So what happens after May, when the month of May expires? Just a second, sorry. I'm going forward. Okay, here. I have to move these windows to see my slides. Okay, so after May expires, then we know that when the month May expires, then June, because June was the current, subsequent month, June will become the current month. And July was listed as the first month of third quarter. July will become the subsequent month, right? So we have current month and we have subsequent month, so June and July. We had October as the first month of fourth quarter. We will have first month of fourth quarter. Now January will become, because January is the first month of the first quarter, it will turn into a standard option. So this will be the second month of the option cycle. So we will have June, July, October, and January. Because this January is added as is converted as or considered as a option part of the option cycle. So January 2020 will be added as a leap option. So this is the reason. So in other words, when the month of May expires, June, which was the subsequent month, becomes the current month. July, which was the first month, becomes the subsequent month. October remains the same, which was the first month of fourth quarter. It's still the first month of fourth quarter. It's still the first month of the option cycle. But we need 2 months from the option cycle. So January will be the second month of the option cycle. So now, since we took January of 2018 out of the leap, we need 1 more month for the leap, so 2020 will be added. So if you're trading off leap, then in the month of May, when the month expires, then you know I got another year, 2020. So you should see 2020 listed. Okay. So I'll give you another example. Yeah. Okay, so in this example, option expiration cycle March. So this stock has option expiration cycle in March, and let's say current date is May. So what happens? So if current date is May, then the current month is May, and subsequent month we know is June. So May and June are listed there, right? It's always like that. Because the stock is belonging to March cycle, and March is the third month of the year. So we will see 2 months from the third quarter, 2 months, 2 third month of each quarter, the third month of third quarter and the third month of fourth quarter listed. So we will see September and December. So in the month of May, we will see May, June, September, and December listed in the option chain. And we will also see January of 2018 and January of 2019 as a leap option. So there are 6 months of options listed. But when the month of May expires, then we know that May gone, so June became the current month. It was a subsequent month. So when June became the current month, they will add July as a subsequent month. Here there was no listing of July, but the July will be added as a subsequent month, and nothing will happen, no changes to all the other months, September, December, January in 2019. Just in the middle, July will be inserted and no other changes. So all you will see is one more month added in the middle, which is July. No adjustments needed in below months. So that's another example. Now this example, there are more adjustments. So let's say option expiration cycle is March and June expiry. Scenario is June expiry. So if the option if it's the month of June, then June and July will be listed as the current month and subsequent month, right? We know that. And because it's a March option expiry, it's a third month, so we know that the third month of September will be listed, and the third month of the third quarter will be listed, and the third month of fourth quarter will be listed. So September and December will be listed. So June, July, September, and December will be listed. And January and 18 and January 2019 for leave will be listed. So what happens after June expires? So when June expires, we know we need 2 months for modified cycle. So July will become the current month. It was subsequent month, it will become current month. They will add August as subsequent month. There was no August here. They have to add August. We are in after June, there is a July as current month. Cannot have a subsequent month. We must have a subsequent month. So August will be subsequent month, because if July is the current month and only 1 week left to trade in the month of July, and then if we don't have a month of August, then what happened? Where do we trade? So we need a subsequent month. So August will be added, right? And September was listed, no change. December was listed, no change. January 18 will become standard option, and January 19 was leap option 2. It will become leap option 1, and they will add 2020 as leap option 2. I guess they are doing it here because it's coming closer. It's only 6 months left, so they are converting. They will convert this January into a standard option, and January 2019 and January 2020 will be added as a leap option. The reason is that if the January 2018 is listed and people are trading and they have options, they cannot just remove the January option, even though the option expiration cycle is March. They cannot just remove January from the picture. So when they are adding, they're adding January 2020, but they convert it into, they call it as a standard option. And they are adding August 2017 because of subsequent month requirement once the June month is expired. So the point is, when you're trading stock option and you're looking at the option chain, how can you tell what a cycle a stock is on? So if you can tell what cycle a stock is on, then you know which month will be added. So if you want to adopt a strategy, you can adopt the strategy accordingly, because you know this month will be added. So you cannot tell by looking at the front 2 months, because each option has the front 2 months. So if today is September and October is there. So you cannot look at tell by looking at the front 2 months which cycle the stock belongs to. So you need to look at the third month option. The third month will give you the clue. So if, for example, if the third month is December, then option expiration is March cycle, because December is what? December is December is the third month of the fourth quarter. So the third month of the fourth quarter. So when it comes to third, it means the third is March. So the stock belongs to March cycle. So you need to look at the third month. But sometimes the third month could be the month of January. So if, let's say, you are in the month of November, trading in November, so November will be listed, December will be listed, right? And then so you cannot tell by looking at November and December. So the third month listed is January. If January is the third month, you cannot tell what cycle the stock is on, because the January was could be part of the leap. So you have to look, if the third month listed is January, you have to go for the fourth month to see this cycle. So if you want, you can just skip the third month always, just look at the fourth month of the option change, and then you can easily tell what cycle the stock belongs to, because the third month has exception of month of January. So when the third month is listed as January, then you have to go to the fourth month. So if you don't want to do that kind of logic, that, oh, the third month is January, now I need to go to the fourth month. So don't do that. Just always go to the fourth month, and the fourth month will tell you what cycle the stock is, because the third month could be if it's January, it could be because of the leap. So look for the fourth month and then decide. So let's say if you are in November, and it's in November, December listed because of the modified cycle, so November, December, and then January is listed. So ignore January, look at the fourth month. And if the fourth month is listed as suppose February, then you know the stock belongs to the second cycle, the February cycle, or whatever is the month. So decide like that. So that's the way you can tell which cycle the stock belongs to. Look for the fourth month. So in this webinar, you learn what is option expiration. We know that each option has its expiration, it expires. We learned that what is option expiration cycle. So option expiration cycles tell us the patterns of the months of the options when the option will expire. We also know why we need to know option expiration cycle, because if we know option expiration cycle, we can adopt the strategies, we can do the proper adjustments, our success rate will go up. We know there are 3 types of options: a weekly option, monthly option, and quarterly options. Modified option expiry cycle, we know modified expiry was introduced after option expiry cycle because of the speculation and hedging purposes, and modified expiry cycle is the current month and the subsequent month. I showed you various examples of option expiration cycle and what happens after expiration date, how the new months are added, and then I showed you the examples of leap cycles. So what happens when the leap months are there for options, and how can you tell what cycle the stock is on? So you need to look at the fourth month of the option chain to tell the stock this cycle is on. I also have a 6-month Mastering the Markets coaching program. So if you're interested, send me email and we can discuss. So my email is noshi@financialmarketswizard.com. Now let me look at the answer questions. When you have time, what's different between weekly and monthly option? When 1 week time left for monthly and weekly, there's actually Not much different, except the weekly option has more time premium, more premium built in, and it's expensive. So if suppose you have to choose, then choose the monthly option. So weekly option has more time, more premium built into it. It's a sucker's game. So you sell the weekly option rather than buy, unless you are sure some event will take place and you just want to gamble. So just, I used to do weekly kind of trading on these big movers like Baidu, Apple, Google. I buy, suppose I buy a basket of all these on Thursday or Friday, and then I liquidate all as a basket on, I buy suppose calls on all selected stocks, 7 or 8, Baidu, Google, IBM, Apple, and then sell the basket on Tuesday or Wednesday as a whole. So whatever I make, I make. I don't, if I lose in one, I don't care. I'm making more in another. So I just, so, but I didn't, I stopped doing it. Do you have to own stock in order to sell the underlying? Yeah, you have to, otherwise it's risky. If you're selling options without owning the stock or having another a long, it's too risky. What's the another one? So the subsequent month takes precedence over the fourth option cycle month. What I understand your question, you're saying the way it works is the subsequent month is always there. The current month and subsequent month is always there, and then there are 2 more months listed from option cycle. So when the option expires, then the current month becomes the subsequent month, and if the subsequent month is not there, then they add a month, and the current month becomes the subsequent month. No, the subsequent month becomes the current month. So there is no subsequent, if there is no subsequent month, then they add another month to make a subsequent month. So that's it. There's no more other questions. If you have any other questions, do you have a higher when you sell options instead of buying options? No, it's the same. It's not. So I don't have any other question. If you have any other question, then please send me email. Okay. Thank you very much. Bye.